In this video, we're going to talk about the volatility that's definitely picked up in this market. Now, personally, a 3% move in a bull market that we've been in is pretty normal here, a 3%, 4% pullback. And if you were on the live stream, we basically said that this 5% pullback is probably going to be closer to a 9 to an 11% pullback when we look at history. And the pullback was right around 10.5%. So we hit that. And I do think we'll get a snapback rally. But the problem is the amount of volatility that we saw. Seeing the VIX jump to these levels was pretty eye-opening to me because we would literally have to go back to like a crisis that takes place to watch that kind of volatility. And that's telling me a few different things. It's telling me that there is a tremendous amount of complacency and there's a tremendous amount of leverage being taken to see these types of moves. When we saw the currencies pull back and the stock market follow, that obviously gave us a signal that there is a lot of leveraging taking place. And I think it's going to come down to a possible deleveraging that's taking place. I don't know how or why, but this one move to me is signaling that there's bigger problems possibly coming. So we're going to talk about the overall stock market condition. Now, Lamb Weston was a call out by a subscriber and somebody I actually subscribe to who does really great technical analysis. And now a big shout out to Art Nigoro for requesting Lamb Weston. So guys, consider subscribing to his channel. He does a great job of breaking down consistent technical analysis. He posts almost every day. So if you're into the technical analysis side of things, I definitely recommend subscribing to the channel. I'll leave his channel link down below. Now, if you're not familiar with Lamb Weston, they are a potato food giant, mainly focused on frozen potatoes and appetizers. They do distribute through United States and internationally. When we take a look at the chart, definitely a pretty ugly chart here as it has fallen substantially from recent highs. Recent high was sitting at $111 a share and now trading in the $50 range. Basically got cut in half. And what I want to point out is it looks like it's making a technical bottom. We're going to switch here to a line chart. And to me, this definitely looks like it's trying to make a bottom here. We had that substantial gap down sell off, and there's obviously a massive gap that needs to be filled right around that $75 mark, $76. And we're getting that W formation that we've talked about on the channel where it's starting to find a possible bottom here. So could we retest these recent lows? Possibly, but it looks like it's wanting to start to trend back up. In a 5-year chart, we see the same thing. And if I were just to draw a couple trend lines here, I would definitely say this is looking more like a cyclical business than a defensive business. If you're a trader, this might be a good stock to trade as it does have those ebbs and flows here of pretty substantial ups and downs. So the first thing I want to point out is even though the price action has fallen off of a cliff here, take a look at the revenue and earnings growth. It's definitely there, strong revenue, strong earnings growth, but yet the price action is giving us possible opportunity here. Trading at 10 times forward earnings, pays a 2.55% dividend. And even if we just look at the forecast, a low of 60 and a high of 130, the stock's sitting at $57. So definitely could be some upside here. And they're expected to earn between $4 to $5 a share, which keeps it in that line of roughly 10 to 15 times earnings. And we can actually see the stocks outperforming on the day, up 2.5%, under a $10 billion market cap. So this one could move a lot, not a tremendous amount of volume here. So any sort of positive or negative catalyst, this is going to be a volatile stock as we saw by the chart, but that volatility does lend opportunity. So I always want you guys to keep that in the back of your mind. Now, thing I want to point out is cash flow is going to be all over the place, 400 million, 128, 107. So we're seeing cash flows actually come down here. Cash and cash equivalents are sitting at some lows here, 71 million in cash and cash equivalents. Total debt sitting at 3.8 billion. Not the greatest balance sheet. Don't love the free cash flow aspect, but so they've done as high as 10 and 11% free cash flow margins, and we can see that free cash flow margins are coming down. And I honestly think that's these could be short-term headwinds here. Shipping costs have been extremely expensive. Packaging costs have been extremely expensive. And I think that these things are going to normalize and they can eventually raise prices to a point where they'll probably get their free cash flow margins back to maybe a healthier rate of, call it anywhere between 7 and 10% would be my guess. And so this is kind of the picture I'm painting for Lamb Weston. I'm trying to say that we all know that inflation has been a massive problem over the last 3 to 5 years. And we're starting to see inflation possibly tick down here, and we could start seeing prices catch up to inflation on companies like Lamb Weston. So I'm building that thesis into my model. Looking over the fundamentals, historically, this is the cheapest the stock's ever been, and I don't think the earnings are actually that bad when we look at 78 cents a share. That's kind of historically what they've done, and then they end up rebounding back and getting closer to $1 and change. So this was a really good call out here, guys. We have right around a $50 price target from a multiple to EBITDA. And we have a 58 price target if we think free cash flow is going to get back on track, which actually puts it pretty much in a buy zone right now. Obviously, I'd like to get it, I think anywhere between $50 to $55 makes a lot of sense. And I can completely understand possibly reaching on this if you think they can outgrow kind of the analysis I'm using of 5, 4, and 3% growth rates. If you think they can do any more than this, and this is a company that you definitely want to take a look at. It looks like, there's some positives here from a valuation standpoint. I do think there's some opportunity. But then when I look at the free cash flow, that's something that concerns me a little bit. The debt load, the free cash flow. But with that growth, they should start getting that back under control. And I think inflation will get under control as well. So a nice call out on Lamb Weston. So the only thing I really want to focus in on the market here is going to be one little area, and we're looking at a weekly chart here. And I believe we're forming a head and shoulders pattern where I do think we're going to rebound from these levels, start rebounding from these levels. And then I do think by the end of the year, we'll be in a high risk period where that right shoulder comes into play. And then we get that breakdown. I think with the volatility picking up, it's going to be something that we haven't seen that really takes place here. A black swan type event. But on the longer term charts here, we're starting to get into rolling over on the MACD. The RSI is pointing down, money flow is coming down, and there's some move to the downside. But with that longer term chart, we have to understand that we could get a pretty substantial few week rally here and or trade sideways. So I do think it's going to be choppy. I think we're going to trade sideways to slightly up from here. And I think we're going to form that right shoulder similar to this left shoulder here where we start kind of ticking back up, and then we're going to get a washout event. Not sure what that event's going to be, but I do think it'll come towards the end of the year. I believe that we will be in some sort of confirmed recession by next year, middle of next year. So middle to end of next year, I think we'll be in a confirmed recession. I think we'll start feeling the pain beginning of the year. And I think we'll start seeing some market activity that tells us that we could be heading into recession by the end of this year. As always, guys, just my opinion. We'll see you in the next one.